So I'm Kate Austin-Avon of Advocate.
And I'm Steve Matt from Best Fit.
And Steve is going to tell me, what are you going to tell me?
Well, what I'm going to tell you is most people don't know that there's a lot of questions that you should be asking yourself before you get a mortgage. And the real savings comes with the programs and the products that are available, not necessarily in the rate or in the fees being charged.
So the rate is not the most important thing.
The rate is not the most important thing. As an example, a first-time home buyer. Virtually every bank out there has a program for a first-time home buyer.
Yeah, that's what we did.
And the reality is, though, is that you need to know what is available in your market. What special program does that bank have for you as an individual? The truth of the matter is there's 3% down with no MI. That $200,000 mortgage is over $100 a month in savings. And no prepaid MI, which also means you'll save another few $1,000s in that. If otherwise, you were going to take an FHA loan because you only had 3% to put down.
And tell me what MI is.
MI is the mortgage insurance that you pay over 80% of the loan amount borrowed.
Oh,
Okay, there's reinsurers out there that actually charge a fee anything over 80% of the loan. So when you put 20 or more percent down, you should have no MI.
Okay.
Unless it's an FHA loan that is automatically today. But if you go to a conventional loan, once you reach the threshold of 20% down, there is no MI requirement. Okay? And so this is a chance to save money. And there's a variety of products out there for you, other individuals buying land and mobile homes. There's credit differences between banks. There's debt ratio differences between the financial institutions. There's down payment changes. And there's, in some cases, dramatic interest rate differences on stuff that they portfolio. Portfolio means they're keeping it themselves. They're not offering it on the open market. Okay, down in Wall Street. And many banks, the most of what they do is immediately sell it. And in some, your local banks will sell most of it, but they'll retain the servicing, which means you'll make the payment to them, and they'll collect the payment and send the payment along, but they've sold the note and mortgage. But other questions that you should be asking yourself: how long do I plan on staying in that home? And why then am I going to take out a 30-year mortgage if I only plan on staying there for 4 years?
Are there other options?
There are other options out there. You could take out a 5 or 7 or 10 one-arm and save at least 0.5% on your interest rate.
Really?
So if I know I'm going to move, why not save money and have it be in my pocket instead of the bank's? Okay?
Yeah.
Do I have a large amount of money coming to me through an estate? Grandparent, parent, some type of an injury or whatever, something I know that I'm going to get, but I'm taking a mortgage today. Well, you got to be careful what bank you go to. Most financial institutions do not offer a product that 6 or 8 months from now, I can apply that money to my mortgage. Understand, you can always apply it to the end, but you're not going to affect your payment.
Oh.
You're only going to affect how much you owe and shorten up the term.
Right.
But there are banks that actually will do what is called a recast. And a recast means that they will rewrite the note and mortgage for a small fee. So not only can you lower the amount that you owe, but you can also lower your payment.
Oh. So if you put a big chunk down because you get some windfall, you still are stuck with that same payment.
Yeah, unless you've gone to a bank initially that will offer a recast. So if you know that, these are questions you should be asking your bank. Some of them may portfolio your loan if you can show them the paperwork to recast it for you because they'll hold it themselves. Other banks have it as a regular product, but most banks across the country do not. Once you've closed that loan, you've closed that loan. And any large sum will only shorten up your term.
Would you refinance at that point?
No,
Or
no,
that's
you don't
not-
have to. It's
Oh.
a small fee just for
Yeah.
them to rewrite the note
Right.
and mortgage.
Uh-huh.
You don't have to redo the whole loan and pay the thousands of dollars in closing costs.
So if you know that you're gonna come into money, you should definitely be looking for something that offers a recap.
Exactly correct, okay? And
Yeah.
another quick thing, since we're on another subject here, the 15-year refi. Be careful. You don't need to do it, because most of the rates today are higher than the rate that you got already. Why are you going to redo your loan to 15 years? Go on the internet, look at it, how much you owe, the interest rate that you owe, put in the 15-year number, and that'll tell you how much you have to increase your payment to have paid it off in 15 years. I don't need to go to a bank and pay $5,000 for the privilege.
Oh.
I can do it 5 minutes on the internet by myself. Okay? It's easy to do, and you can do it.
With your help.
With my help,
Because I
maybe.
wouldn't want to do that by myself.
And
Yeah.
just so you know, Best Fit, and I have a website, by the way, is free. There are no charges for what I do on the residential side of the aisle. All I do is assist you in taking advantage of what's available in the market and where to go to get what you need. And by the way, I am not paid any money by any banks. I am retired, and this is my give back.
That's pretty nice.
Thank you.
So mortgageandcreditadvice.com. Steve.